We have a new stock pick for you and it is called SoFi. We like SoFi, it's an exciting company, and after this video you'll understand it completely. So for full benefit, watch the full video, but we know your time is also limited, so we have placed timestamps in the description so you can see which parts of the video you want to watch. For full benefit, watch the full one. So let's get into it. SoFi. SoFi Technologies is an American online personal finance company. SoFi, short for social finance, offers a user-friendly, all-included finance platform, so a super app, with their mission to help people reach financial independence to realize their ambitions, similar to FinMeUp's mission. SoFi aims to create a one-stop shop for all financial needs and become the AWS of Fintech. SoFi started in 2012 focusing on student loan financing, but since then they have grown into a company that does basically everything when it comes to finance. This includes products such as day-to-day banking, credit cards, different types of loans, stock trading, and crypto investments even. So let's look at their competitive advantage. SoFi is in a unique position with its all-inclusive business model that separates them from their competition. Their main value proposition is the level of convenience to clients by essentially having everything under one roof. So one-stop shop, while delivering excellent customer service. SoFi brings a level of personal finance unlike anything before seen in the market. Looking at the stock price. So the stock price is currently trading at around $8.57, but obviously it's volatile with the market today, so that can differentiate when this video goes live. But it was founded in 2011, but only started trading publicly in June 2021. Thus, the company has only been trading publicly for a few quarters. It should come as no surprise that the company is still very volatile. This can be attributed to a few factors: the short New York Stock Exchange listing period, the volatility of the fintech industry in general, and competition with the various fintech giants in different sectors with the finance industry. And we've seen, the general market taking a big hit, especially unprofitable high-growth companies and especially fintech companies. Even PayPal, even Square all took big hits. So they are a fintech company, and the market cap is $7.1 billion, so it is not that big and it has a lot of potential. The one-year return is negative 55%, and the year-to-date return is negative 45%. So it has been taking a big hit. So looking at the technical analysis, the resistance level, the share price has hit the red resistance level around $25 on 3 occasions since the start of 2021. And that was in January 2021, June 2021, and November 2021. And it has failed to break out from those levels. If we see a recovery in the future, the $25 level will be an important level to keep track of. But I mean, that's more than double than the current level. So, I own shares, disclaimer, not financial advice. So if it goes to $25, I'll be smiling. Looking at the relative strength index, the RSI, and this ratio indicates overbought or oversold levels. The SoFi stock price has ranged between the RSI index level between 30 and 50 since December 2021, with current levels around 29.5. This usually indicates severe undersold levels, which normally signals a buying opportunity for investors. This is just the index, not financial advice. Looking at the fundamental analysis, so the bullish overview, membership growth. Firstly, the membership growth, SoFi has increased its user base at a massive and quite a big rapid pace. They now boast 3.5 million users, and with their previous quarter, which was the Q4 that they announced, it was 87% growth in the last year. So the product growth, and this is obviously where they make money through products, SoFi experienced the 6th consecutive quarter of triple-digit product growth in Q4 2021, where 857,000 new financial services products were used in Q4, up 56% from Q3 to a total of 5.2 million products, which is more than double what they had in 2020. And then also the bank charter. So SoFi is in the process to obtain its own banking charter, and this bank charter will allow SoFi to hold deposits and use them to fund loans. It will also add regulatory clarity and set up a better framework for holding loans on the balance sheet. So they were granted this charter, which is great for them. The international exposure, so obviously we want to see businesses growing exponentially, and how you do that is also growing overseas and in international markets. So SoFi is planning to open operations in various continents, starting with South America and Europe. if we look at the charts, we can see that they have massive growth in their products and in their users and in their revenues. So now looking at the new businesses. So they announced that they acquired 2 new businesses the past while, and they will probably continue to buy more businesses as they build the AWS of Fintech. So the first business is Technisys, which is the leading next-gen digital and core banking platform. Technisys empowers financial institutions to dynamically create tailored financial products at a quick rate and by offering meaningful recommendations to customers at point of need. The combined, business between Galileo, which is the other one, and Technisys technology stack, so the 2 stacks together, it will create what is expected to be the only end-to-end vertically integrated banking technology stack. From user interface development capabilities to a customizable multi-product banking core and ledger with fully integrated processing and card issuing available for SoFi products and Galileo/Technisys partners. So Galileo and Technisys combined is a company, and it's able to meet both the expanding needs of their existing partners as well as serve additional established banks and fintechs and non-financial brands looking to enter the financial services, similar to what AWS does to technology businesses. So let's look at what the banking charter means for SoFi. Starting a bank which will fully originate SoFi's loans, starting a bank which will fully originating the SoFi's loans in May 2022. That's when we'll start seeing the effects of this banking charter in May 2022 onwards. SoFi will be much more efficient in running their financial services without needing to send fees to a partnered bank. Let's look at the assumptions now that they have the banking charter. So the first assumption is that the federal student loan payment pause will expire on May the 1st, and that they will go back to the pre-pandemic loan volume in Q2. So that's not complete with the bank charter, but it's one of the assumptions for SoFi going into this year. And then part of the bank is that SoFi Bank will start to contribute meaningfully to the business in the second quarter of this year. And SoFi will continue to deliver 30% margins as they invest the rest of their earnings back into the business to assure future sustainable growth. And then the final assumption is that SoFi would want to be able to respond in their lending business to any interest rate hikes, because we all know inflation, it's crazy, and the interest rates will get hiked, and that will affect the loans business, but it could potentially even benefit them. We'll have to see. They'll want to respond to this, and as a shareholder, we'll want to see that they respond to this in a positive way. So let's look at how the banking charter will affect the product offerings. SoFi Money will go from an account that they partnered with a bank to their own SoFi checking savings account. So they're moving it back to their own business internally. They will be able to give a high interest rate on checking, which they plan to make higher than anyone else, and do that with no fees. So they will fight overdraft protection and the ability to pay with your phone, even with your card, able to pay your friend person to person, this peer-to-peer. So then also they will offer more loans at lower interest rates, so better interest rates. And then also there will be no minimum balance or restriction on spending. So SoFi also implements the reward system, which makes it a quite cool and gamified system as well. Now looking at the management, the people who run the business. SoFi CEO Anthony Noto is quite experienced. He was the former COO of Twitter. He was a managing director at Goldman Sachs. He was CFO on the National Football Leagues as well as the head of Twitter Ventures. We like him. So far, he has showed that he can execute. He still has a massive mountain to climb if he wants SoFi to become the AWS of Fintech. Looking at the risks to do with investing in SoFi, we should always consider the risks. The first one is interest rate risk. A big part of SoFi's business is its loans and debt department. Higher future interest rates due to high current global inflation will cause fewer people to take out loans as loans become more expensive. Plus, more people will maybe default on their loans. Let's hope it does not happen. Then also competition is a risk. So SoFi, being a multifaceted company, does offer plenty of opportunities, but this means that they must compete with leading firms in various industries. Gaining sustained market share in all of these sectors will be a challenge because, usually people say don't try everything at once. This is literally what they are doing. But this, it's a long journey. So anyway, then the final risk is negative earnings. Although SoFi has produced excellent year-on-year revenue growth, which was 74% in 2021, and also guiding for more growth, the company has yet to make a net profit due to its high operating expenses. Negative earnings means no meaningful PE, EPS ratio, or ROE ratios. This is not uncommon for high-growth companies, but investors would want to see positive figures once SoFi establishes itself. We expect SoFi to become profitable around 2024. For now, it's all about investing in growth, and that is also good because you want a company to gain market share, especially as a high-growth company. Let's look at recent news and sentiment. So the Natural Bank Charter approval happened in January 2022, which was actually ahead of expectations, and they received the regulatory approval to become a bank holding company. Then also in February 2022, SoFi closed a bank merger with Golden Pacific Bank. So SoFi became a bank holding company and Golden Pacific Bank began operating as SoFi Bank. So it's quite interesting. Then also the company has completed the acquisition of Technisys, which is a leading cloud-native digital multi-product core banking platform that we just discussed. And also a big news, and this is one I like, directors have been buying shares, especially the CEO, Anthony Noto. And I can tell you now, directors sell for many reasons. It can be to buy a new car or a new house or fund something new. But when directors buy with their own personal money more shares in the company, it usually shows that they obviously know more than shareholders what's going on in the company, and they are bullish, because why would you invest in something if you think you're going to lose money? So they are bullish on their own stock. So, closing remarks. SoFi is such an exciting company to track due to its innovative technology, a wide range of products, and high growth rate. The company was also listed on the NYSE very recently, which opens the door to even more capital inflows from potential investors. If SoFi manages to compete with the current tech giants, it will likely become a household name within the next couple of years, and we've seen massive growth. So, our opinion. Just a quick disclaimer, our team members own shares in SoFi, so, we are more bullish, and this is not financial advice. Always do your own due diligence when it comes to managing finances. So, here's our bottom line. We like SoFi. We like the opportunity, we like the management, we like the product, we like the vision and the plans going forward, and we like that we are early. But that is also why there is risk. It carries risk being early. It's risk versus reward. With a market cap of close to $7 billion, it has the potential to become a 10x over the next few decades, maybe even. Or years and decades, who knows how long it might take. But it carries risk, as they are still very early, and they have big competitors in the fintech space. But if they execute, they have an incredible and a massive total addressable market. So if they execute, this is a company that can 10x. It is a company with a potential, but they still have a long way to go and a lot of execution in front of them. I hope you found value. Please consider joining the FinMeUp community. The link is in the description. Also, if you found value, consider hitting the like button and subscribe. It really helps us reach more people and grow into our vision of clearing the way to financial independence for our community. The new app is coming very, very soon. The early bird sign-up list is in the description. We can't wait for that. You can expect a lot of stock picks like this. You can expect a lot of content from industry experts, interviews, cryptocurrency education, financial education, everything. It's going to be amazing. Hope you have a great day. Let us know what you think of SoFi. Is this a company you own? If not, why not? And if you own it, let us know what you love about the company. Have a great day. Cheers.